CMQ investors, welcome to the show. This is Chris Franco, and I have to be transparent with you, or radically transparent, as Kathy Wood would say.
Absolutely.
Absolutely.
I want to share with you why I am scared to purchase Tencent, based on a lesson that I learned from studying Warren Buffett. Now, Tencent, similar to Alibaba, has taken an absolute beating over the last year or so. Also similar to Alibaba, this is a powerful company. Now, typically owning a business that's the clear market leader, especially one where the price is so beaten down, that tends to be a winning value proposition for us as investors. But for the reasons that I'll show you next, I don't feel as confident about that, and that's why I'm not investing. The problem is that Tencent's main product, or in this case gaming, is viewed by the government of China as spiritual opium. Yes, spiritual opium. In China, they do things a little bit differently than in the United States. They've seen negative second-order effects from young people playing video games all day. It's affected them physically, it's affected them mentally, and like any good parent would do, the CCP put their foot down.
Among the rules, no playing video games at all from Monday to Thursday. And on Friday, Saturday, and Sunday, play is limited to 1 hour a day between 8 p.m. and 9 p.m. No industry can be allowed to destroy a generation.
You might say to yourself, video games are harmless, but as my friend Dr. Phil would say,
We got a problem, folks. This ain't gonna work.
My son is addicted with violent video games. He never comes out of his room to eat with us, but he will yell out from his room, "Peasant, bring me a plate."
Growing up in the Franco household, if I ever spoke to my mother like that, I'm pretty sure I know exactly what would have happened to me. And I'm pretty sure if I called Child Protective Services, that person would probably suffer the same fate. But I digress. In China now, if you have an addiction to video games or your cell phone, even the internet, you get sent away to a place like this.
At a digital detox facility to fight addictions, young men and women live structured boot camp style days with counseling and group therapy with a communal eating area.
Okay, I know what you're thinking. That seems really bad. Like, how can they do that? How can they do that? But ask yourself, would you rather be sent to a place like that or sent to a place like this?
They call me Hustle Man. All that bullshit these kids doing out on the streets, we're not taking that up in here.
Scared straight.
You pretty to me, man. I'll be all up in your ass. You know what I do to tough like you, man? I sell that boy for Zuzus and Wham Whams.
You gonna call my Chester whenever I tell you. Call me Chester right
now. Okay. Now, regulations alone don't scare me away from a company. So I want to illustrate my, hesitation to Tencent in a more fundamental way. To borrow a quote from Warren Buffett, our goal as investors is to purchase part interest in businesses whose earnings are virtually certain to be materially higher in 5, 10, and 20 years from now. Predicting the future, let alone the future earnings of a given business, is very difficult to do. That's because the future earnings of a business are uncertain. Because the future is uncertain. This is why investing, by its very nature, is an exercise in probability. Now, as an investor, I want to give myself the best chance of outperforming the average market rate of return over the next 20 plus years. So with that considered, it would not be wise for me to bet my hard-earned money on a business that makes much of its money on a product that its own government views as poison. Tencent also derives a lot of its revenue from social networking. Social media is not exactly adored by China's government. Based on my reading, the CCP has a need for political and ideological stability. Social media is viewed as a threat to that stability. Now, just to be clear, I don't think Tencent is a bad business. In fact, it's one that I will be continuing to watch and learn more about. And it does have the dominant position in what could be the dominant market for gaming. There's also some that say Tencent is the only business or the only gaming business in China that's uniquely positioned to surf the metaverse wave. And that's seen by many as a really big opportunity. But we don't know what's going to happen with the metaverse, let alone Tencent, let alone tomorrow. So going back to Warren Buffett's wisdom, I believe there's a better than 50% chance that Tencent's earnings will be materially higher in 5, 10, or 20 years from now. But more than 50% is not enough for me. Because remember, I want to be virtually certain, not just more than 50% certain. Now, I don't expect perfection in any of my investments, but I want to avoid making big mistakes that I would look back and regret. And I would regret investing in a business who derives a significant portion of its revenue from let's call it a product that its own government thinks is spiritual opium. I think it's probably a better idea that I steer clear and just watch from the sidelines on that. Now, you might disagree with me, and here at CMQ Investing, we like to hear all different perspectives. Charlie Munger always says, and I'm paraphrasing, he doesn't believe he should have an opinion on anything that he can't argue both sides of. And I think that's a great way to approach not only the conversations we have as part of this community, But just investing in general, you have to see both sides. Otherwise, you'll easily or could easily have blind spots. And blind spots, well, I think that doesn't typically work out well for investors. As they say in boxing, it's the punches you don't see that cause knockouts. But let me know your thoughts in the comments. I'd love to hear from you. If you haven't yet already, I'd appreciate you subscribing and liking this video. And thanks again for watching. For CMQ Investing, my name is Chris Franco. We'll talk soon.